I mean, Tesla is obviously a huge company, very successful company, and its share price has gone through the roof. But what is really unprecedented about it is just the scale and the activity in the options, Tesla options. We're talking $240 billion worth of nominal options trading a day. That is twice as much as there's Amazon and almost twice as much as the rest of the S&P 500 complex combined. So it's just staggering, right? There have been days where more Tesla options have traded than everything else combined. And that's unprecedented.
Hey, I'm Stephen and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So in today's video, I'm reacting to a fascinating new article about the Tesla financial complex. In short, how Tesla stock and Tesla options are dominating and influencing the wider financial markets. First, I'll be reacting to some comments from the article's author on CNBC, and then we'll read through the article in detail and I'll share my thoughts and comments along the way. But first, let's see what happened to Tesla stock today. Unsurprisingly, another very volatile day for Tesla stock today, closing at $1,109 per share with a range between $1,180 and $1,062, about a 10% variation throughout the day. In case you haven't noticed by now, Tesla stock is rarely boring, and that's kind of the theme of today's video, so let's get into it. If you love crypto, stocks, and free stuff, or just want to help out the channel, check out these great offers. BlockFi are launching the world's first Bitcoin rewards credit card. People in the US can earn 1.5% Bitcoin back on every purchase with no annual fee using the BlockFi Bitcoin rewards credit card. Check out the link in the description. And for a limited time, you can get up to $250 in crypto bonuses when funding a new account on BlockFi, where you can use cryptocurrency to earn interest, borrow cash, and buy or sell crypto. If you want your free crypto, use the link in the description. And if you'd like up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $300 just for opening an account. And if you make an initial deposit of $5 or more, you'll get a second free stock valued up to $2,000. Seriously. Free stocks? Yes, please. And finally, if you're in Australia, the UK, or New Zealand, you can get a free stock with stake, also linked in the description. Thanks so much for your support, guys. Let's get back to it.
Great piece. Got a lot of attention this morning. You talk about its share of the options market, its share of hedge fund trading, retail fascination. What of those metrics do you think is the most interesting?
I think it's hard to look past the options side. I mean, Tesla is obviously a huge company, very successful company, and its share price has gone through the roof. But what is really unprecedented about it is just the scale and the activity in the options, Tesla options. We're talking $240 billion worth of nominal options trading a day.
That is actually insane. $250 billion of nominal options activity in Tesla stock alone every day. This is bananas. Tesla's market cap is about $1 trillion. So roughly 1/4 of Tesla's market cap every single day in terms of options. Now keep in mind, this isn't net options activity. There's a lot of buying and selling, algorithmic trading, blah, blah, blah. But the point is here, Tesla options alone doing about $250 billion every single day. What the hell? Out of interest, let me know in the comments below if you currently own any Tesla options.
That is twice as much as there's Amazon and almost twice as much as the rest of the S&P 500 complex combined. So it's just staggering, right? There have been days where more Tesla options have traded than everything else combined. And that's unprecedented.
This really is staggering. Just to give some context, the combined market caps of all companies in the S&P 500 approximately $40 trillion. Tesla approximately $1 trillion. Tesla accounting on some days for 50% of the options trading on the entire S&P 500, yet only accounting for 2.5% of the total market cap.
Why do you think this is? Is it say something about sentiment overall? Is it about this giant turn that we're making in one of the biggest industries in the world? Is it about his cult of personality as the richest man in the world?
All of the above, basically, right? I think Tesla is unique in how it's captured the zeitgeist of innovation at a time when technological change is so rapid, right? And we can see that electric vehicles are going to be a far broader part of the future. People then extrapolate into thinking that Elon Musk is going to solve all sorts of problems and revolutionize all sorts of industries. And when that hype, and that's been building for years and years, combines with an incredible retail trading environment like we've seen over the past 18 months, and a resurgence of options trading, you kind of have a perfect storm. You have a great meme stock, basically, the mother of all meme stocks, combined with a once-a-century options trading environment. And what you get is, a mega cap like Tesla adding $400 billion of market cap, for almost $500 billion in a year. And that's just staggering.
Yeah, but Robin, here's the problem. Elon Musk himself has been critical of the rise in Tesla's stock price. He reiterated that as recently as the Code Conference just back in September. Also, you've got options that are making the entire market a lot more volatile, and we've seen the impact of that in trading of Zoom and other stocks today. And then you've got Musk himself, who in the past has been unpredictable. How much of a market risk is Tesla and Elon Musk right now?
Hard to say. I think it's fair, and this is sort of my central thesis with this Tesla financial complex, is that what happens in Tesla doesn't stay in Tesla. It is just so big now, and it has such a huge options market and associated structured products that reference Tesla. Lots of hedge funds are long or short. All fund managers basically get whipsawed depending on what kind of weighting they have in Tesla. That it's just not something we can ignore anymore. Now, whether it's a market risk, what people call a systemic risk, that's what I'm not so certain about. But I do think that although, Tesla dropping 10, 20% isn't all a disaster. We saw that after Musk, started selling down his shares and after the result of some of these tweets. That didn't ripple that much further. But that just took Tesla back to where it was in October, right? Tesla could basically drop 50% in value and still be one of the most richly valued companies in the world. And that's just staggering. And I think the ripple effects from that are probably unappreciated, right? Because clearly some people are going to lose money. That always happens.
Now, I know this is going to sound pretty obnoxious, but in my opinion, it's literally impossible to lose money in Tesla stock unless you're an idiot. Let me clarify. By the way, I just want to make sure that everyone understands I'm serious. Of course, I don't have a crystal ball or a time machine, so I can't know for sure, but here's how I personally believe you can not lose money in Tesla stock. Are you ready? Get your notepad, take some notes. This is pretty important, very complicated. Ready? 1, buy Tesla stock. 2, hold Tesla stock for at least 10 years. The end. Of course, this isn't investment advice. This is just a bet I would be willing to make with anyone. However, I'm not going to waste my time making individual bets with people. I'm just betting my own capital by being all in on Tesla stock and not intending on selling a cent of Tesla stock for at least 10 years. Well, actually, truth be told, never. At some point in the future, I'll borrow against the stock using margin and capitalize the interest. And then when I die, well, some of my stock can pay off whatever I owe. Unless, of course, Tesla stock begins to pay dividends, in which case, all the better. This is an opportune moment to once again plug my I'm all in on Tesla stock merch. If you don't already have yours, check out the link in the description or the card in the corner. There's shirts, there's hoodies, there's mugs, there's long sleeves, phone cases, and plenty more. And I am willing to bet publicly and on the record that 100% of the people who are currently all in on Tesla stock in 2031, November 24th, are going to be sitting on a profit unless they did something dumb, aka they didn't hold the stock for at least a decade before selling. And why am I so confident that only a moron would lose money investing in Tesla stock if they follow this simple plan? Well, for those of you who haven't already seen, check out the card in the corner, sign up to Patreon, get access exclusively to my Tesla stock price targets for the next 10 years in the bear case, bull case, and the base case, and you'll understand where I'm coming from. It's really that simple. Now, losing money in Tesla stock options, that is a different can of worms. Now, I don't personally have anything against options. I've never owned Tesla stock options, but I have nothing against the idea. But we must acknowledge Tesla stock itself is extremely volatile. Options themselves tend to be quite volatile. When you combine those two things together, you're most definitely playing with fire. Potentially spectacular returns are on the table. So too are potentially spectacular losses. I personally think the chance of Tesla stock going to zero is about the same number. However, Tesla stock options regularly do go to zero, and this can be a complete and utter loss of capital. Again, nothing against Tesla options. Personally, I find it very difficult to imagine a scenario in which anyone could lose money owning Tesla stock unless, per the prior comments, they're a fucking idiot, aka they don't hold for at least a decade. Tesla stock options, however, much higher probability of a small, medium, or total loss. So now let's look through the article in detail. We're here over on the Financial Times. The title of the article, The Tesla Financial Complex: How Carmaker Gained Influence Over the Markets. Subtitle: The company's role in the ebb and flow of the stock market is far greater than its $1.1 trillion valuation implies. The rally in Tesla's shares has lifted the overall stock market value of Elon Musk's electric car maker to over $1.1 trillion, making it one of the most valuable companies in the world. This year alone, it has added almost $475 billion in market capitalization, equal to a Procter & Gamble, a JP Morgan, or 2 McDonald's. However, the real importance and wider footprint of what might be called the Tesla financial complex far outstrips the company's market capitalization. This is thanks to a vast, tangled web of dependent investment vehicles, corporate emulators, and an enormous associated derivatives market of unparalleled breadth, depth, and hyperactivity. Combined, these factors mean Tesla's influence over the ebb and flow of the stock market is far greater than even its size would imply. It may even be historically unrivaled in its wider impact, some analysts say. Quote, "We don't really have the language to describe Tesla anymore," says Michael Green, chief strategist at Simplify Asset Management. "It's like explaining to a person in a two-dimensional world the concept of up." The Tesla financial complex is a phenomenon that many investors, whether passive index funds, traditional mutual funds, hedge funds, or ordinary retail investors, have no choice but to contend with, given the idiosyncratic force it now exerts over the stock market. Quote, "It stands out like a sore thumb. It's something you've got to pay a lot of attention to." One of Tesla's oddest quirks is the fuel that has helped power its rocketing stock market value. Although its stock is widely popular with many ordinary retail investors, the swelling size and hyperactivity of Tesla options, popular derivatives contracts that allow investors to bet both on and against the stock and magnify any gains or losses, has also flabbergasted many market veterans. The nominal trading volume of Tesla options has averaged $241 billion a day in recent weeks, according to Goldman Sachs. That compares with $138 billion a day for Amazon, the second most active single stock option market, and $112 billion a day for the rest of the S&P 500 index combined. This makes Tesla stock more prone to whipsaw movements because of the leverage inherent in using options to trade. Very important point. This is one of the core drivers of Tesla's volatility. Quote, "The Tesla options volume has always been outsized, but now it's huge. Tesla almost represents a generation at a time when option trading has taken off. The Tesla options market, more than 60 times as active as the entire FTSE 100 options market and almost 7 times greater than the Euro Stoxx 50 options, has helped push US options trading volumes above actual stock trading volumes this year." Now, that is a statistic to blow your mind. One more time. US option trading volumes have exceeded actual stock trading volumes this year. What the actual fuck? Now, maybe it's just me, but generally speaking, the concept I have in my mind is the stock market, and then a small subset of activity in terms of dollar amount within the stock market is options. Well, it turns out in the US this year, that has actually been reversed. More activity in dollar amount in terms of options trading than stock trading. That is a mind-blowing fact, at least to me. Is anyone else surprised by this? Let me know in the comments below. Tesla accounts for a big chunk of that aberration. In November, options trading was 50 percentage points higher than stock trading in nominal terms. What the hell? And without Tesla and Amazon, it would have been 20 percentage points lower, according to Goldman Sachs. Quote, "The combination of a high market cap and extraordinary option activity make Tesla a critical driver," the investment bank said in a note. Golding estimates that historically, the combined trading activity in US equity options has been between 10 and 20 times larger than activity in the biggest individual equity options market. However, there have been days recently where Tesla's option trading activity has been 5 to 6 times the rest of the S&P 500 options ecosystem combined. Quote, "The size of the Tesla options market is absolutely enormous." This really is mind-blowing, stunning stuff. Tesla dominates the US options market. We're looking here at the average daily options volume in the 3 weeks up to November 15th, and we can see a picture is worth 1,000 words here. This is pretty impressive. The value of options depend on what the underlying shares do, but due to their complex mechanics, analysts say the option tail can occasionally wag the equity dog if there is enough activity in them, and even bleed into the broader stock market, adding to its churn and making it harder to navigate for many investors. And the point here about the tail occasionally wagging the dog, totally true. When Tesla stock options are being purchased, on the other side of that trade, the actual stock needs to be purchased as a hedge. In other words, if a ton of Tesla stock options are being purchased, this can force a ton of buying of Tesla stock itself, and that can drive the price up. Who will bet against Tesla? I think I can answer that question for you. Morons will bet against Tesla. People who hate themselves will bet against Tesla. People who live in their mum's basement will bet against Tesla. People who feel inferior every time they see Elon Musk's life accomplishments may bet against Tesla. People with mental illnesses and delusions may bet against Tesla. And I think that's about it. Let me know in the comments below if I've missed anyone. Ordinary retail investors have been the primary power behind the Tesla options boom, but some of them have more resources to make bigger leverage bets on Musk's company than others. IT billionaire Leo Kogwan recently said that he had by early November accumulated almost 7.2 million shares in Tesla. By the way, shout out to Leo. They had largely been accumulated through aggressive purchases of Tesla call options, which give buyers the right to buy shares at a pre-agreed price within a certain time period, and offer a popular route to boost gains. Bloomberg previously verified the growing size of his gigantic ball. Bloomberg previously verified the growing size of his direct equity stake and options investments, and in September, Tesla's investor relations head confirmed Kogwan's original claim. That would make him Tesla's third biggest individual shareholder, behind Musk and Oracle co-founder Larry Ellison, with a stake worth almost $8 billion, and has made him a hero on Reddit forums dedicated to the carmaker and trading. Leo Kogwan equals Tesla God, one thread declared. Quote, "He's trading a lot of options. We can definitely see his footprint in the market and he's inspiring others. It's almost as if he's waving the Tesla flag and people on Reddit see him as someone they can follow." Tesla's fame and the volatility of its stock have also started to make it a component in some structured investment products, such as auto-callables, further enmeshing its shares into the fate of the broader financial ecosystem. Auto-callables are complex savings vehicles, particularly popular with Asian investors, where bankers construct an attractive, bond-like fixed return by selling stock options. Historically, they have been mostly options on broad stock market indices such as the S&P 500, Hang Seng or Nikkei, but because of the falling market volatility, some bankers have started to structure them with options on choppier individual stocks. Tesla has emerged as a popular choice. Quote, "Tesla is perceived as safe because it is big and at the technological vanguard, but it's incredibly lucrative for investors to put into structured products because it is so volatile." The frenetic rally in Tesla has also buoyed money management groups such as Cathie Wood's ARK Invest and Baillie Gifford, which have bet heavily on the electric car maker. But there is a flip side. Its gains have left a huge and growing blot on the performance of many other investors with only negligible or modest positions in Tesla relative to its big heft in their benchmarks, or underweight in market jargon, due to what many see as its widely inflated valuation. And gotta jump in here. The people who see Tesla's valuation as wildly inflated don't actually see Tesla. They see a projection of what they think Tesla is meant to be through a lens that isn't giving them an accurate picture of the company. Oh, they're an automotive manufacturer. Valuation doesn't make sense. In my opinion, these dum-dums deserve to underperform the market. All the evidence is there if you care to do the homework and actually take a proper, thorough, and unbiased look at Tesla rather than reasoning from analogy, reason from first principles. In my opinion, Tesla is one of the most undervalued stocks in the entire market. Some people are much slower to figure this out than others. These have been my thoughts on Tesla since it was a $30 billion company when I began investing. US mutual funds focused on growth stocks suffered their worst bout of underperformance in at least 2 decades in October, largely due to the car makers rally. For US mutual fund managers as a whole, Tesla alone crimped their relative performance by 0.46 of a percentage point in October, according to Wells Fargo analysts, helping turn what was heading towards being a decent year into yet another mediocre one for stock pickers. This is a very interesting graphic here. We're looking at average daily share volume and option volume over 1 month for the largest US listed stocks, companies with a market cap of over $100 billion as a percent of shares outstanding. And Tesla is an extreme outlier. Options turnover as a percent of shares outstanding, almost 20%. I mean, this is bonkers. Quote, "Managers that have been underweight Tesla have certainly been punished. It has been a sizable driver of underperformance for many. You have to wonder whether a lot of them are now holding it simply due to fears they're going to lag." This is a fair point. Betting against Tesla has been particularly painful. I mean, if you want to punch yourself in the face, it's probably going to hurt. So, I mean, what do people expect? I mean, as I've said, as one of my best-selling pieces of merch says, don't bet against Elon. If you don't have yours already, check out the card in the corner or the link in the description. As always, there's shirts, hoodies, mugs, phone cases, and plenty more. And by the way, if you happen to own any Don't Bet Against Elon merch, let me know in the comments below. Betting against Tesla has been particularly painful. Hedge funds that have shorted Tesla shares over the past decade are sitting on cumulative losses of, wait for it, over $60 billion. One more time. People who are dumb enough to bet against Tesla have lost a total of over $60 billion, with a B, billion dollars. Now here's a little bit of homework if you guys want to have a little bit of fun. Find out how much capital Tesla has raised in the history of company, and you'll know how many additional Teslas these cumulative losses could have actually funded. You may be surprised at the answer. Just this year, the losses have come to $11 billion. The short interest in Tesla, the percentage of shares that have been lent out and sold by hedge funds, has now fallen from 20% at the start of 2020 to just 3.3% by mid-November. A sign, industry insiders say, that fund managers are now reluctant to risk their careers betting against a stock that has defied financial gravity for so long. Prominent bears keep falling by the wayside. Michael One-Hit Wonder Burry, the hedge fund manager made famous in The Big Short, last year called Tesla's stock price ridiculous and revealed that he was shorting it. But in October, he said he had ended the trade and closed out the short position. Shorting Tesla stock can be rather painful. Quote, "It's the original meme stock," says Green, referring to companies like GameStop that have gained sky-high valuations off the back of social media hype. Now, I have to jump in here. I don't really think this is a fair assessment. This seems to imply that Tesla's valuation is detached from reality, that it doesn't make sense, and the only reason Tesla stock is up is because everyone's decided that Tesla stock should be up. In reality, as you guys have heard a million times on this channel, Tesla is in an incredibly dominant position. They have a 7+ year first mover advantage. They're destroying the internal combustion industry. They've already won the decade. They're printing money. They're only going to become more profitable as they scale. It's a done deal. This is one of the greatest stories in the history of business, period. And Tesla is, wait for it, leading the charge in the transition towards electric vehicles. So I really don't like the term meme stock when it relates to Tesla. The reason that Tesla stock is up is because people are starting to realize that they've won the fucking decade. Quote, "Shorting Tesla is just an ego trade at this stage. Tesla has been a primary contributor to destroying the credibility of active managers over the past few years." I love that quote. EV bubble. Underscoring its financial idiosyncrasy, Tesla stock tends not to be much affected by other market and economic trends, but correlates somewhat with Bitcoin, according to analysis by Quant Insight. At the moment, Tesla's shares seem to be benefiting from a mixed bag of factors, such as rising inflation expectations, tighter dollar conditions, and uncertain credit markets. Quote, "Tesla spends a lot of time out of recognizable macro regimes, unsurprising when it is often driven by idiosyncratic factors like Elon's tweets." The success of Tesla's stock has also helped inflate what some analysts and fund managers think is a broader bubble in anything related to electric vehicles. Tesla emulators Rivian and Lucid are now I can't even say this without laughing. Rivian and Lucid are now valued at about $110 billion and $90 billion respectively, despite having negligible revenues and no profits, because the bell curve is real. An index of EV and electric battery companies compiled by the Financial Times has combined market capitalizations of almost $1.8 trillion. In contrast, automotive giants like Toyota, Volkswagen and Hyundai, the biggest car manufacturers in the world, are worth about $254 billion, $135 billion, and $42 billion respectively. There's obviously a big halo effect with anything electric vehicle related at the moment, thanks to Tesla, says Benjamin Bowler, an equity derivative strategist at Bank of America, and this is a totally fair point. There's a lot of morons out there who assume, well, Tesla did it, must be easy, everyone else could automatically do it. Whatever goal they set, we're just going to believe that they'll achieve it. It's not going to play out that way. A lot of people are going to lose colossal amounts of money, but hey, it is what it is. I do agree though, Tesla's success is now being reflected in the absolutely obscene valuations of pretty much any other company that even makes a computer rendering of a supposed electric vehicle that they'll supposedly be releasing in the future. Even Nikola, a gigantic fucking fraud. Wait, sorry, I mispronounced that. Let me try that again. Even Nikola, a gigantic scam of... jeez, I'm having a tough one today. It's hard to read these words sometimes. Let me try again, I'm getting a bit tongue-tied. Even Nikola, an electric truck startup that has set aside $125 million to settle fraud charges from the Securities and Exchange Commission over claims that it misled investors about its technology, very foolish investors about its technology, is still valued at $5.4 billion. That is enough to qualify it for the blue chip S&P 500 index, if it had ever made any profit. If Tesla's ascent continues, it will further enrich believers, hurt the dwindling band of doubters, and drag swaths of the broader equity market up with it. But if it were to fall sharply, it could cause ripples through the financial markets that are far in excess of what many appreciate. It really depends on how sharply we're talking here. Tesla did drop as much as 17.6% in November, which I would say is falling relatively sharply. I mean, it lost like 12% in a single day, over $100 billion gone like that. It's a pretty sharp fall, wouldn't you say? Before rallying once more, without the fall triggering any major ripples. But even this decline only took it back to its October level, and a bigger, more sustained drop could prove more impactful. There is a huge, recursive, tail wagging the dog nature to the valuation of a lot of other things these days, says Dixon. I'm unwavering in my belief that ultimately, the fundamentals are what matters. But over the past few years, I can see that the short and intermediate term is far more dominated by flow, momentum, memes, and appetites. He recalls the financial analyst Ben Graham's adage that the stock market is a voting machine in the short run, but a weighing machine in the longer run. Quote, in the current environment, I think we're spending a lot more time voting, says Dixon. On this final point, I think this is certainly true of many of the so-called electric vehicle companies, and I use the term so-called because if you haven't reached volume production, you're not an electric vehicle company in my opinion. You're an idea, you're a marketing company, and maybe in the future you'll reach volume production without going bankrupt, but until then, you ain't an electric vehicle company. I thought this article was absolutely fascinating. I think there's a lot of valid points here, some astonishing numbers as well. I mean, I cannot get over the options trading volume on Tesla. I mean, just absolutely bananas. Let me know what you guys and girls thought in the comments below. Did you find these numbers staggering, or was it just me? And by the way, just a quick reminder, don't forget, if you'd like exclusive access to my Tesla stock price targets out over the next 10 years, check out the card in the corner or the link in the description to sign up to Patreon. You'll also get access to 100 exclusive Q&As and a ton of other exclusive content and plenty of perks. I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. And don't forget the BlockFi Bitcoin Rewards credit card, where you can earn 1.5% Bitcoin back on every purchase. There's a link in the description. You can also earn up to $250 in crypto bonuses when funding a new account on BlockFi, also linked below. And finally, don't forget your free stocks with WeBull and Stake, also linked in the description. These great offers also help out the channel. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.